Subbu asks if there are any circumstances in which a one-time investment is better than an SIP in equity funds.
Yes, if you have the foresight, if you think, in one situation, if you think that the market will go up dramatically over a period of time, and you have the courage of conviction, you have the willpower, and you are willing to withstand any interim decline, which means you are stubborn, uh, then which means that you are an astrologer or you are a magician, then it will work very nicely. You will be able to buy exactly at the low and wait for the market to go ballistic. And it could have happened. It could have happened with some person who would have invested heavily in 2003, from where, as I was telling you, that market was at 2800 level. That was the time when we launched I remember this level of the Sensex, because in 2003 we launched our magazine Mutual Fund Insight, and that was the time when the only game in town was invest in fixed income fund. Talking about equity fund, because in the recent past 3-4 years in 2003, equity funds have had only disappointed. Anybody who invested in equity funds, in the technology fund, they had lost money. Most mutual funds, the popular ones, 5-7 of them, open-end funds, they were largely investing in three kind of stocks, FMCG, pharma, and technology. That was all there to it. The Indian funds were not investing, they were the primary drivers of performance for these. In fact, our analytical framework was, we used to look at funds and say how much of the money is in the three, FMCG, pharma, and technology, and that, higher in this allocation in these three. And then we saw a turnaround of the economy, and the market went up, and market just went going up. And so I would say that if you are able to do all these things, but it's very difficult to do that, so devise a methodical plan, get started. uh, don't try to do this, and if at all you have, unless you have some distinct advantage, about a company, about something, about, I'm not saying insider information, but you have a belief and understanding, you have some competitive advantage by way of your understanding, then only you should venture that. And then you should have the temperament, because there are only 2-3 ways in which you can achieve this. You have some competitive advantage with your understanding, and you have the temperament, and then you are able to concentrate on some of those things. You are able to have the focus of doing it with 2-3 stocks or 1 or 2 fund which you think will be doing extraordinarily well for a certain reason. If you don't have that, stick to a plan. Maybe concentrate your portfolio, look for the focused fund, look for the relatively risky fund. But I would say that don't get distracted from a methodical plan. If at all you have any such plans, do it with a small part of your money. Don't put your financial future at risk because you think of one such situation.